Bitcoin the best performing asset of any asset that you have in your client portfolios, 12 of the last 15 years. And it's on pace to be, 13 out of 16 because it's winning this year. Okay, so why do most people have zero? Doesn't make any sense. The correlation of Bitcoin to bonds is 0.0, and the correlation to stocks is 0.15. So it's the best diversifying asset. If you look at the Markowitz framework for building portfolios, it's the best diversifying asset we've ever had.
Within the ever-changing realm of Bitcoin, Mark Yusko's name is recognized as a source of wisdom and vision. His forecasts are respected in the financial industry since he created Morgan Creek Capital Management and serves as its chief investment officer. Recent data from BitMax Research highlighted the significance of Yusko's forecasts. The Grayscale Bitcoin Trust witnessed its largest daily outflow to date, totaling $643 million on March 18th. This coincided with a dip in Bitcoin's price, dropping from over $68,000 to $62,000, its lowest since March 5th. Despite these fluctuations, Yusko maintains that we're still in the early stages of the biggest crypto bull market in history. Yusko was right when he predicted that institutional money would come in to spot Bitcoin ETFs. Based on a tiny portion of wealth management assets, he predicted, even before to their approval, that in the upcoming years, these ETFs will enable at least $300 billion to flow into Bitcoin. Yusko recently discussed his predictions for the 2024 cryptocurrency bull market in an interview with AdvisorShares. Beginning in June 2024, he forecast parabolic moves with notable increases anticipated for assets including meme currencies, Ethereum, Bitcoin, and Solana. Come explore how market dynamics and institutional adoption may affect the future of cryptocurrencies as we delve into Mark Yusko's thoughts.
We are deeply into crypto summer, although the fun part starts in crypto fall, which will start this June post-halving. I've been talking about this forever, literally. The whole hashtag get off zero. Zero is the wrong number. And we're starting to see that permeate everywhere. So, the early adopters, the nerds, the geeks, the wizards, all that stuff, that happened kind of from, 09, 10, 11, 12, 13 into 17, 18, 19. And that first decade is tough for people to really kind of catch on. But now we have these ETFs, which make it possible to buy without going through all the hassle of having a device and deal with the bearer assets. And it's such a big deal. And I don't think people really appreciate how big. I mean, it's pretty amazing. You go back a year, and a year's not that long, right? But a year ago, we were sitting just around 20K. We had rebounded 33% off the Hurricane Sam bottom of 15K, back when, everyone was like, oh, it's going to zero. Like, zero is a really big difference from $15,000 per coin. Now, it was zero in 2009. I mean, literally zero. There was no value in the network. It was a science experiment. People didn't really know what to think. Was this really anything? Today, if you spent any time with Bitcoin, you understand that it is the future of money, right? And by money, I mean the base layer of money equivalent to gold. Beyond that, Michael Saylor's been on TV lately talking about how it's digital property. Even calling it a cryptocurrency is undervaluing what this means. And as more and more people realize that, we went from 20,000 a year ago to over 70,000 today per coin, and a market cap well in excess of $1 trillion. So again, from zero 15 years ago to over $1 trillion. And here are two things for advisors that are really, really important. Actually, three things. One, it is Bitcoin the best performing asset of any asset that you have in your client portfolios, 12 of the last 15 years. And it's on pace to be, 13 out of 16 because it's winning this year. Okay, so why do most people have zero? Doesn't make any sense. Second thing, the Sharpe ratio, meaning the return per unit of risk, is the best over the past decade of any asset. And it's not close. So again, how could anyone have zero? Doesn't make any sense. And then the last is, and it really underpins that the second, the correlation of Bitcoin to bonds is 0.0, and the correlation to stocks is 0.15. So it's the best diversifying asset. If you look at the Markowitz framework for building portfolios, it's the best diversifying asset we've ever had. Better than hedge funds, better than private equity, better than real estate, better than REITs, better than commodities, better than CTAs, better than cannabis, better than anything. And that doesn't mean those other things aren't good. This is just better. So the light bulb's gone on that everybody has to get in the pool.
Richard Tang, the CEO of Binance, is optimistic about the future of Bitcoin, despite the recent sell-off in the Grayscale Bitcoin Trust, GBTC, and the ensuing price drops. Speaking on Sunday at a gathering in Bangkok, Tang updated his previous projection for the price of Bitcoin in 2024, predicting it to rise beyond $80,000. Tang blamed the large inflows into spot Bitcoin ETFs since their approval in January for his updated projection. He anticipated that in the near future, additional family offices and endowments will increase their contributions to these funds. Tang predicts that the combination of more demand from the ETFs and lower supply following the halving will drive the price of Bitcoin over his initial projections. But Tang issued a warning. The cryptocurrency rise won't follow an easy path higher. He said there will be ups and downs, but in the end, he thought the market will benefit from these changes. Similar to Yusko, Tang believes that the bull market is just beginning, suggesting that things are about to heat up. Keeping these observations in mind, let's go back to the interview to examine Yusko's thoughts about the changing cryptocurrency scene.
So in the beginning, every 10 minutes, they would create a block. And in order to create a block, you have to have miners, which are basically just computers, to cryptographically secure that data, create a hash. Okay. And in order to entice someone to buy computers and pay for electricity and do this, you pay them what's called a block reward. So the way Bitcoins are created is every 10 minutes, back in 2009, 50 Bitcoin were awarded to the miners. Every 4 years, that number gets cut in half. Well, if you think about that, the genius of it is if you cut the rewards in half, well, then some of the miners would go out of business. Well, the miners don't want to go out of business, so they hold their Bitcoin longer until the price rises, because that's how markets work, right? People say there's more buyers than sellers, or more sellers than buyers. No, there's always the exact same number of buyers and sellers. That's how a transaction works. It's the price that adjusts. If a buyer wants to really buy, like right now, every day, money's going into the Bitcoin ETFs, those ETFs have to buy. They don't have a choice. They must buy. So they are price insensitive. No matter what the price, they've got to buy it. The sellers, on the other hand, are like, I don't have to sell. So you know what? Unless you pay me more, I'm not going to sell. Now, if they need the money really fast, like say the electricity bill comes due, they're like, I just got to sell, no matter what the price, no matter if the price is falling or whatever. It doesn't really matter. So supply and demand have to balance. But if the price then starts to rise, well, what happens? Well, that causes attention and that causes activity. And so we get these cycles where the price starts to go up. And the problem with the price going up of anything, whether it's NVIDIA shares or MicroStrategy or Bitcoin, the gamblers start to come in. They're like, oh, look how high this is going. I'm just going to buy it. Did you do any work? Well, no, it's just going up. I'm going to buy it. And so it pushes the price to crazy town. So that was 2017 at 20,000. The fair value of the network was 10,000. We got to 20,000. In 21, the fair value of the network was 31,000, and we got to 68. Well, eventually, the kid says, hey, that guy's not wearing any clothes, right? The emperor has no clothes. And the price will adjust, and that's crypto winter. So we went through crypto winter in 21, and we went all the way down, right? all the way down to 15,000, way below the fair value, because the fair value had started to creep up into the 40s. So we were way below fair value. Well, then what happens? Well, when any asset, again, whether it's a cannabis stock or a bond, it doesn't matter. If the price is below the fair value, because that's one of the things about price. Price does not equal value. Yeah. In fact, John Burbank, one of my good buddies in the hedge fund, said price is a liar, right? Price has nothing to do with value. Price is just what two people agree to exchange a small amount of good or service. Mm-hmm. The value is what the value of the asset is. Mm-hmm. So when the price was 15 and the fair value was in the 40s, I'm waving it in. Like,
come on in, yeah.
So I'm gonna buy it. So that was a year ago. And for the last year, we went from crypto winter in 21 into crypto spring, right? Mm-hmm. Which is where the price kind of stabilizes. Then crypto summer, which we're in today, right? So from June of 23 to June of 24 is crypto summer. And crypto summer is where you start to get back to fair value. So fair value today is in the low 50s. Well, we got there right before the ETF launch. And now we've exploded up to 70. It's like, what's going on? Supply and demand.
As we come to the end, after finishing our exploration of Mark Yusko's observations, we have a better grasp of the complex mechanisms behind the Bitcoin market. His careful analysis of Bitcoin mining operations and his insightful examination of halving cycles and block rewards provide for an excellent primer on the fundamentals of digital currency economics. Yusko provides an intriguing look into the psychology of market players by explaining the conduct of miners. He reveals the driving forces behind miners' efforts to save their rewards in expectation of future price increases, shedding light on the strategic calculations that maintain Bitcoin's inherent worth and scarcity. This understanding of supply dynamics is essential for investors trying to understand how digital assets will develop over time. Furthermore, Yusko's examination of institutional participation in Bitcoin ETFs highlights how market demand is changing. These institutional giants are reshaping the market environment by introducing a new paradigm of price insensitivity and investing large sums of money in Bitcoin assets. It is critical to comprehend how institutional inflows and individual investor behavior interact in order to confidently navigate the intricacies of the cryptocurrency market. But Yusko's thinking goes beyond simple economic principles. He serves as a sobering reminder of the inherent volatility and unpredictability of the cryptocurrency market with his cautionary stories of speculative enthusiasm and subsequent corrections. Recognizing the cyclical nature of market cycles and the dangers of speculative bubbles, viewers are given crucial insights into chances to take advantage of, as well as dangers to avoid.